Good morning, students, and welcome you all on the lectures on IND AS 116. I hope I am audible and my voice is clear to each one of you. So, students, this is a very important standard, lengthy standard, and a detailed standard, I would say. And we will complete this standard in the next 5 classes. Okay. So, right now in the schedule, the 4 classes are allotted, but we will cover this standard in 5 classes, and the schedule on BOS portal will be updated soon. Friends, this is a leases standard, IND AS 116 leases. If I talk about leases is not a new concept, but if I talk about IND AS 116, of course, IND AS 116 gives you a lot of detailed and lot of new guidance about leases. Let's discuss the leases standard, what we have read earlier, what is there in the global jurisdiction, and what is there in terms of IND AS. Right? Friends, in India, we had a old standard which is known as AS 19. We all have learned about AS 19. We all know AS 19. We have covered this AS 19 in our CF intercurriculum IPCC curriculum, right? Accounting standard 19. We all know accounting standard 19. Probably we have used this standard during our articleship period as well, right? Globally, friends, there was a standard known as IAS 17, International Accounting Standards 17. This standard is no more, right? This standard was deleted. This standard was demised. And now, globally, there is a IFRS 16 which takes care of leases. In India, when we had notified IND AS, right? When we had notified IND AS, we had notified IND AS on 16 February 2015. In India, IND AS came on 16 February 2015. Okay. So in 15-16, when these IND AS were notified on 16 February 2015, when these IND AS were notified, there was a standard called IND AS 17 on leases, right? But now this standard is deleted. This is demised. And now the applicable standard on leases is IND AS 116. So if I talk about accounting standard, it is AS 19. If I talk about IFRS, it is IFRS 16. If I talk about IND AS, it is IND AS 116, right? Friends, while talking about this standard, first of all, I'll give you the background. I'll give you the context. I'll give you the history that why the older version of Indian accounting standard, IND AS 17, was deleted and why this new IND AS 116 was introduced. Sir, whether IND AS 17 is relevant for us, answer is no. It is not relevant for you guys because IND AS 17 was deleted long back. Long back means it was deleted 4 years back, right? And in your examination, no any question will be asked from IND AS 17. Sir, in that case, why you are talking about IND AS 17? It is important to talk about the older version of standard just to give you a feel that what has been changed in IND AS 116, because in IND AS 116, the entire lessee accounting, what we have read earlier, even in AS 19, the entire lessee accounting has been changed. In the older version of IND AS 17, in the older version of IAS 17, right? These standards were comparable with our AS 19, but IND AS 116 is not comparable with AS 19 because in IND AS 116 there are new guidances, there are different guidances, and even the lessee accounting is totally different in IND AS 116 in comparison to our accounting standard 19. Okay. So in the initial part, I'll talk about that what was the old standard and what was the need for changing that standard in a global scenario, because we all are aware in globally IAS 17 was there and that is why we had issued IND AS 17. But when IAS 17 was replaced by IFRS 16, we had also deleted IND AS 17 and our IND AS 116 replaced IND AS 17, right? Now let's understood the key dates about these standard, right? If I talk about accounting standard 19, this accounting standard 19 is still applicable, right? This accounting standard 19 is still applicable. The companies are applying AS 19. Which companies? The companies which are in the preparation of financial statement as per accounting standard, which are preparing their financial statement as per accounting standard. These companies are applying AS 19. AS 19 is still hold good because it's an accounting standard. Sir, what about globally? What about outside India? Outside India, IAS 17 was applicable up to 31st December 2018. From 1st January 2019, IFRS 16 is applicable. Please write down the key dates. Right? IFRS 16 was made applicable from 1st January 2019. Right? So outside India, so the calendar year is a financial year, and normally the new standards notified or new standard was applicable from the beginning of the financial year, which is a calendar year outside India, right? And that is why the applicability is always from 1st January. IFRS 16 was applicable from 1st January 2019. As on date, yes, International Financial Reporting Standard 16 is applicable. Okay. Coming back to India, talking about Indian accounting standard, IND AS 17. IND AS 17 was notified on 16 February 2015, and IND AS 17 was applicable till 31st March 2019, right? So globally, when this IFRS 16 was made applicable from 1st January 2019, in India, we have also made applicable IND AS 116 from 1st April 2019, because in India, our calendar year is not financial year. Our financial year is starting from 1st April and ending on 31st March, right? So this IND AS 116 was notified on 30th March 2019 by Ministry of Corporate Affairs. This IND AS 116 was notified on 30th March 2019 by Ministry of Corporate Affairs, and this standard is applicable. This standard was applicable from 1st April 2019. Okay. So today, IND AS 116 is applicable to the companies which are preparing their financial statement as per Indian accounting standards. Right? So in India, two standards are applicable today on leases. Accounting standard 19 for the companies which are preparing their financial statement as per accounting standard, like banks, like insurance companies, like unlisted companies whose net worth is less than 250 crores. If I talk about listed companies, they are applying IND AS 116 for the accounting and reporting of leases. Okay. Globally, it is IFRS 16. Is that clear? Okay. Now coming back to the comparison. So if I compare IFRS 16 with IND AS 116, there is no change. So our Indian version of standard, Indian version of IND AS 116 on leases is same, whatever is there in the foreign version of leases, which is IFRS 16. But if I compare accounting standard 19 with IND AS 116, there is a huge change between AS 19 and IND AS 116. If I compare accounting standard 19 with IAS 17, older version of leases, if I compare AS 19 with IND AS 17, there was minimal changes, right? So our older version of IND AS 17 on leases versus AS 19, there was no much changes. But if I compare AS 19 with the new standard on leases, which is IND AS 116, there are huge changes. Is that clear? Is that clear, friends? So we are going to discuss IND AS 116. Coming back to IND AS 116. Okay. So first of all, I'll summarize some concept on leases, right? And you guys need to talk about the leases, that what is your understanding on leases. And of course, you need to talk about AS 19. I'm not expecting that you should talk about IND AS 17 or IND AS 116, but give me some facts on accounting standard 19. If I talk about AS 19 or if I talk about leases standard, right? How many parties are there in a lease contract? How many parties? Because lease is not a new concept. Even though if you guys are student, probably you are living in a rental accommodation. Let's say a person who is coming from UP and for preparing for CA examination. So 2-3 guys are taking a flat on a rental basis, right? They are paying lease rental. They are paying lease rental. So in a contract like lease contract, how many parties are there? Of course, two parties are there. One is tenant and one is landlord. Landlord is one who is the owner of the property and who is charging the rent. And tenant is one who is paying the rent, right? So in a technical language of accounting standard, two parties are there who are known as lessor and lessee. You are right, Viraj, who is known as lessor and lessee, right? So if I talk about lease standard, the entire accounting, whenever we are talking about accounting, we will be talking about the accounting in the books of the lessor and in the books of the lessee, right? These are the two parties who are entering into a lease contract. One who is paying the consideration and one who is receiving the consideration, right? One who is providing his asset on a lease basis and one who is taking the asset on a lease basis, right? Clear? So two parties are there, lessor and lessee, or I can say that landlord and tenant, right? So lessor and lessee, the entire accounting is happening in the books of either lessor or lessee, right? Lessor and lessee. So this standard covers the accounting in the books of lessor and accounting in the books of the lessee, right? Like AS 19, like IFRS 16, like IND AS 116. So this standard also covers the accounting in the books of lessor and lessee. Now there were two type of leases which you have heard in AS 19. What are two kind of leases which you have heard about in AS 19? Can you just let me know what are the two kind of leases in AS 19? Yes, operating lease and finance lease. Operating lease and finance lease. There are two type of leases in AS 19. Operating lease and finance lease. Okay. Operating lease and finance lease. Friends, you must have heard about operating lease is a lease where risk and reward are not transferred. Finance lease is a lease where risk and reward are transferred, or asset is given for a longer period of time, probably for the lifetime. Probably, if the asset is given on lease for the major part of the economic life, it will be considered as a finance lease. So you must have heard about these concepts, right? In case of operating lease, the lessee is recognizing lease rental in the P&L. The lessee is recognizing lease rental in the P&L. And lessor is recognizing the lease rental income in the P&L. Lessee is recognizing lease rental expense in the P&L. Okay. And asset belongs to the lessor, and lessor keeps on recognizing the asset in the books of account and charging the depreciation, right? In case of finance lease, lessee recognizing the asset in the books, in its books of accounts as a leasehold asset, okay, and leasehold liability, okay. For example, if I am a lessee, I have taken a machinery on a lease basis from the lessor, right? The life of the machinery is 10 years. And I have also, the life of the machinery is 10 years. And I have taken this machinery on a lease for a period of 10 years. This is a finance lease as per AS 19. And as a lessee, I will recognizing the asset in my books of account today. I will pay the rental in the next 10 years, but I'll recognizing the asset today in my books of account. At what value? At what value? At the present value of lease rental. You are right. You're right, Rahul. At the present value of lease rental. Okay. Although I am paying the rental in the next 10 years, but today, at the commencement of the contract, I am recognizing the leasehold asset. And that is why I am also recognizing the leasehold obligation. What will be the accounting entry? If I'm debiting my asset, I have to credit something. Since I'm not paying today, so I'll credit my leasehold obligation. Right? This is what we were doing earlier. So leasehold asset account debit to leasehold liability account in case of finance lease in the books of the lessee. What lessor will do? Lessor will de-recognizing the asset, right? For example, if lessor was having a machinery in as a fixed asset, as a PPE, so lessor will credit the PPE, but what lessor will debit then? लेसोर की बुक्स में एक पीपीई था, उसने फाइनेंस लीज पे दे दिया, उसने उसको क्रेडिट कर दिया, बट व्हाट ही विल डेबिट? पैसा तो आया नहीं. द मनी which will be received by the lessor, it will be received in the next 10 years. Today lessor has not received any money. What lessor will debit? Lessor will debit leasehold receivable. He will debit leasehold receivable, he will credit the property, plant and equipment, right? This is what accounting was there in terms of the leases, right? Lessor, lessee, what we have understood, what we have read in our AS 19. I believe you guys are aware about this accounting of AS 19. You guys are aware about this accounting of AS 19. You all are aware about this accounting of AS 19. Yeah. You are aware or you're not aware? Good. This finance lease accounting, operating lease accounting, okay? This concept of capitalizing the asset in case of finance lease on the basis of present value of lease rental. The same concept which you have read in AS 19, the same concept was there in IND AS 17, in the old version of Indian Accounting Standard, in the old version of IFRS Standard, which was IAS 17, and IND AS 17, the same concept was there. Whatever we have discussed just now, the same concept was there in IND AS 17 also, right? But effective 1st April 2019, effective 1st April 2019, this standard was deleted and a new standard, IND AS 116 was introduced. The new standard, IND AS 116 was introduced. Now, what was the rationale behind introducing IND AS 116? What was the rationale, right? And what change this IND AS 116 brings in? Okay. Friends, I'll give you 3 scenarios, and after hearing on these 3 scenarios, you will be able to understand that what change IND AS 116 brought in, right? What change IND AS 116 brought in. Okay. Let me take you on the Excel file and please confirm once you will able to see my Excel file. Please confirm. Please confirm if the Excel file is visible to all of you. Is it visible to all of you? Okay. Friends, IND AS 116 leases. I am giving you 3 scenarios, right? And you need to tell me whether asset and liability is going to be recognized or not recognized. Scenario number 1. Scenario number 1. And let me take the name of the students. Shruti. Shruti has purchased a car from her own funds. Shruti has purchased a car from her own funds. Right. Shruti, in that case, and let's say Shruti has purchased a car from her own funds for rupees 10 lakhs. Shruti, in that case, what accounting entry you will pass? Car account debit to bank account, right? Shruti will recognize the asset because she has purchased the car from her own funds. Her bank balance will get reduced. her bank balance will get reduced, right? And her asset will come in the balance sheet. Her asset will come in the balance sheet, right? Friend, I'll require your regular, interaction. I'll require your regular confirmation. Are you able to understood me? Are you able to understood these things? Yeah. So car account debit to bank account and an asset will come in the balance sheet. And an asset will come in the balance sheet. Second, and let's say Tanisha. Tanisha has purchased a car by taking a car loan, right? For rupees 10 lakhs. What happens in this case? What happens in this case? What accounting entry will you pass? What accounting entry will you pass? So every month Tanisha will pay EMI. Okay. Every month Tanisha will pay the installment of the car loan, right? And she has purchased this car. Okay. What accounting entry she will pass? Car account debit to car loan account. So she will recognize the asset and she will recognize the liability. Okay. Recognize the asset and recognize the liability. Recognize the asset and and reduce the own funds, right? Recognize the asset and liability. In both the cases, Tanisha is recognizing the asset, right? In both the cases. Why? Because Tanisha is purchasing the asset. And what Tanisha is getting the right to use the asset, right? Tanisha is using the asset. She is getting a right to use the asset. Shruti is using the asset. She is getting the right to use the asset. In the second case, when Tanisha is purchasing a car by taking a car loan, what happens if she will not pay the installments? What happens? Let's say this car loan is for a period of 5 years. Okay. This car loan is for a period of 5 years. And she will stop paying installments after 1 year. So what happens in that case? What happens? Probably the bank will forfeit the car. Bank will recover the car from Tanisha. Bank will take back the car, right? And probably Tanisha will not be able to, use that car. Clear? Yeah. So bank will recover that car from Tanisha and bank will auction that car. Okay. And you must have seen that, lot of house properties, lot of cars, these are getting auctioned by the bank. Okay. So, right, Shruti, car will be taken away back from the bank. By the bank, the asset will be seized and be repossessed by the bank. You are right, Shruti. You are right, Tanisha. Now the third case, you must have heard about in your normal talking things, when you must be heard about when people are saying, yeah, we are living on a rental basis and I am living in Delhi and I'm paying a rent of, let's say, 50,000 rupees per month. So then your friend or your parents will suggest, instead of paying a rent, why don't you take a loan and pay the EMI? At least your rent will stop, right? Instead of paying a rent on a monthly basis, let's start paying an EMI installments, right? So that you will have your own house, right? You will have your own asset. So likewise, in the third scenario, Geeta has taken a car on lease basis. Right? Geeta has taken a car on lease basis for 3 years. What is happening here? In the first case, Shruti used its own fund and purchased the car. In the second case, Nisha has purchased the car by taking a car loan, right? So C has an obligation in the balance sheet on a right side and a right. So C has an obligation on the balance sheet on the left side, and right side C has an asset. Third case, instead of paying a monthly installment, Geeta chooses a monthly rental to the landlord, right? So C has taken a car on a lease basis. What you will do here? What you will do? So Geeta will recognizing the lease rental in the P&L, right? Geeta will recognize the lease rental in the P&L. Am I right? Clear? So if I compare the option number 1, option number 2, and option number 3, if I talk about use of the car, if I talk about the right to use of the car, I'm not finding any difference between 1, 2, and 3. And especially if I compare between 2 and 3, when Tanisha is paying an installment to the bank, she is recognizing the asset in the books of account. But when Geeta is paying the rental to the lessor, she is not recognizing the car in the books of accounts, right? If I talk about the lease, lease is another form of financing, right? Lease is another form of financing. Lease is a source of financing. If you go to US, right? If you go to US, you will find everything on a lease basis. Everything you will find on a lease basis, be it house property, be it household equipment, everything you will find on a lease basis, right? Instead of getting a bank obligation, people are getting the things on a lease basis, okay? Because they are getting a right to use that asset, okay? So the right which Tanisha is having from that car, equally Geeta is having those rights from the use of the car, right? Now the question was the question was started raising in the global domain, in the global jurisdiction. One question was started asking by different regulators, that the option number 2 and option number 3 is not comparable. When someone is getting the right to use asset, when someone is getting the right to use of an asset, that person is not recognizing the asset in the books of accounts. But when someone who is taking a finance, who is taking a loan to buy that asset, that person is recognizing the asset as well as liability, right? But the person who is taking the asset on a lease basis, I'm not talking about finance lease, I'm talking about operating lease. But a person who is taking an asset on a lease basis, that person is not recognizing the asset and not recognizing the liability in the books of accounts, right? So option number 2 and option number 3 is not comparable at all. Why? Because in option number 3, recognizing the expense. In option number 3, Geeta is recognizing the lease rental expense, right? And I am here talking about accounting standard 19, right? This is what we are discussing. The same concept was there in IND AS 17 also. In IND AS 17 also, the same concept was there in IND AS 17 also. Friends, that is why in 2005, I'm talking about 2005, you know, the Securities and Exchange Commission of USA, the staff of this Security and Exchange Commission of USA, like we have SEBI, we have Securities and Exchange Board of India. In USA, it is Securities and Exchange Commission of USA, right? So friends, Securities and Exchange Commission of USA has analyzed the annual report of listed companies, the financial statement of listed companies, and they have found that close to 3 trillion US dollar of liability and asset are sitting outside the balance sheet. Close to 3 trillion US dollar. Can you imagine? This was the GDP size of India. So just a week back, India has crossed $4 trillion. But if I talk about 6 months back, $3 trillion was the GDP size of India. So Securities and Exchange Commission of USA has analyzed the listed company's balance sheet of USA and found that $3 trillion worth of asset was sitting outside the balance sheet. Right. And why they are saying this thing? They are saying this thing. Why? Because even in case of leases, why people are opting for leases? People are opting for leases if they don't want to take the bigger obligation. They are taking the smaller obligation. Instead of paying the EMI to the bank, they want to pay the lease rental to the lessor, right? And that is why they are paying the rental, because they are getting the same right to use. I'm talking about right to use. They are getting the same right to use of the asset, whatever, if they are taking on a loan basis or they are taking on a lease basis, the same right to use they are getting from option number 2 and option number 3. So dialogue started happening. If someone is getting a right to use, then why this asset should not be capitalized in the balance sheet? Why this liability should not come in the balance sheet? Right. Because in our old AS 19 and IND AS 17, you must remember there was a disclosure, and disclosure was minimum lease payments. Minimum lease payments in next 1 year, right? 2 to 5 year, or next, up to 1 year, 1 to 5 year, and more than 5 year, right? You are required to show what is your minimum lease payments on over a non-cancelable lease period. आपका नॉन कैंसिलेबल लीज पीरियड में मिनिमम लीज कमिटमेंट कितनी है? व्हाट इज द नॉन कैंसिलेबल पीरियड? नॉन कैंसिलेबल पीरियड आर दोज पीरियड even though if you will cancel the lease contract, you will walk out from the lease contract, still you are required to pay the entire lease rental, right, for that non-cancelable lease period, right? So if this obligation is determined, if this obligation is fixed, then why not the asset and liability needs to be recognized in the balance sheet? Sir, but at what value? Let's say in this case Geeta has taken a car on a lease basis for 3 years. So whatever Geeta is going to pay over a period of 3 years, you can recognizing the asset and liability on the basis of present value of the lease rental, like you were doing on a in a AS 19 or in AS 17. And friends, with this objective, the standard was changed. Even US GAAP was changed. IFRS standard on leases was changed. And that is why IAS 17 was deleted and IFRS 16 was issued by International Accounting Standard Board, right? And they have brought the concept of capitalization of right of use asset and crediting of leasehold liability, right? So they have come out with a single lease model. Single lease model means there will not be any operating lease, there will not be any finance lease, right? For example, if you are taking an asset for a lifetime, let's say the life of the asset is 10 years, and you are taking the asset on lease basis for 10 years, you are recognizing the asset on a present value of future lease rentals for 10 years, right? And you are crediting the lease liability. What happens if you are taking a asset on a lease basis for a period of 3 years? So you have to recognize the asset over a present value of lease rental for 3 years and credit the lease liability. As simple as that, right? So the only thing is the value of the asset and liability is changing depending on the tenure of the lease, right? And what asset you are going to capitalize? The asset you are going to capitalize is right to use asset, right to use asset, right? And this was the big change which brought in by IFRS 16 and IND AS 116. In IND AS 116, you are required to capitalize all the operating lease as well finance lease, right? In our old AS 19, we were only capitalizing the asset in case of finance lease, but not in case of operating lease. But now you are required to recognize, capitalize all the asset in the balance sheet. Is it clear? All the asset in the balance sheet means all the operating lease asset in the balance sheet. Sir, but at what value in this case? What changed? What changed? IND AS 116 brought in, right? So the bigger change was there is no operating lease and finance lease model in IND AS 116. There is only a single lease model. There is only a single lease model, right? Single lease model means capitalization of right to use asset and creation of lease liability. Like in this case, Geeta has taken a car on a lease basis. Let's say I'll write here on a basis of lease for 3 years on a yearly rental payable at the end of every year for rupees 1 lakh, right? What was my AS19 accounting? What was my AS19 accounting? What is my AS19 accounting? My AS19 accounting is lease rental expense, debit, lease rental expense debit, right? To bank, credit. What is the amount? Every year amount is 1 lakh. Okay. I'm just taking the basic concept because this is important. When you understood this concept, you will be able to understand that why this IND AS 116 has been changed. Because if you will not understand this basic concept, probably you will always asking a question that what IND AS 116 has bring in, why this kind of accounting is going to happen. Because being in India, you have AS19 on one side and IND AS 116 on the other side, right? Even if you become a practicing chartered accountant, you have a client which you are auditing on IND AS basis, and you will have a client which you will be auditing on a AS basis, right? So on AS you are doing a separate treatment, and IND AS you are doing a different treatment, altogether different. So you should understand that why this change is there, right? So AS19 accounting is quite clear. IND AS 17, the old IND AS 17, the older version, it was same. IND AS 17. Older version of IND AS, on leases, which is not applicable as of now, right? Which is not applicable, which is deleted and not applicable as of now, right? In this case, what is the accounting? Same accounting. Lease rental expense account debit to bank accounts. Same. Now, what happens in IND AS 116? What happens in IND AS 116? IND AS 116. What happens? In IND AS 116, you need to capitalize this right to use asset and leasehold obligation. Now, the question arises, how to capitalize, right? At what value? Of course, present value of future lease rental. You need to compute the present value of future lease rental. Assuming the discount rate is 10%. It will be given in the question, right? Assuming the discount rate is 10%, compute the present value. Year 1, 2, 3. These are the years. Amount, lease rent, lease payment, 1 lakh. Right? Discount rate, present value factor, PVF, at the rate of 10%. For the first year, it will be 1 divided by 1.1. For the second year, divide by 1.1. For the third year, again divide by 1.1. Present value. This multiply by this, right? This will be the total value, total present value, right? For the total lease payment of 3 lakh, the present value is coming at how much? The present value is coming at 248,685.20, right? This is simple calculation which you guys are doing already, right? 248685. Now what is the accounting entry? The accounting entry is of use right of use asset right of use asset account debit to what to what to lease liability, because you're not paying right now, you're not paying today, you will be pay in the next years, right? And what is the accounting entry? Right of use asset account debit to lease liability, 248685. 248685. Now what will happen? You have capitalized right to use asset, so you are getting a right to use that car for 3 years, and that is why you have capitalized right to use asset, right? If this car would have taken on finance lease, even in AS 19, you would have capitalized this car, right? At what value? Present value of future lease rental. So you, let's say life of the car is 10 years and you got the car for a period of 10 years. So you will be capitalizing the car on the basis of present value of future lease rental over a period of 10 years. If you are getting the car for 3 years, you are capitalizing this car on the basis of present value of the future lease rental for a period of 3 years, right? So in IND AS 116, since you are getting a right to use of an asset, right? You are getting some right and you are capitalizing that right. And that is why in IND AS 116, the concept of operating lease and finance lease is deleted from the lessee perspective, right? From the lessee perspective. Because when the standard setters, the regulators were arguing, debating, and discussing, they were asking, let's say, if you are getting a license from the government or from anyone, you are capitalizing that license as an intangible asset. Why? The answer came that in the license we are getting a right to operate, right to use. Then the second question which was asked by the regulator or standard setters, in case of a leasehold premises, let's say Viraj or Tanisha or Shruti, let's say you have taken a premise, you have taken a flat on a rental basis. You are paying a lease rental. You are getting a right to use that flat, right? Who will put the lock on the gate? Whether you are landlord or you. Whenever you are entering, whenever you are coming, you are going, you will put your lock. I mean to say the key will be in your control. Am I right? Am I right? Second, you are paying a lease rental. You are not the owner of the house. You are not the owner of the house. You are paying the lease rental. Whether the lessor, your owner, will enter this house, this flat, which is in your possession, whether that landlord, the owner of the house, will enter your house only after your permission, or since it is his house, so he can come or he can go at any point of time. Of course, he has to take your permission, right? Because you have the right to use of the asset. You are paying a consideration, and while paying a consideration, you are getting a right to operate, you are getting a right to use, and the landlord has to take your permission. He has to ask you, I need to come to visit the house, so can I come at this point of time, right? Is that clear? So it is in your control, you are using that house, and that is why for getting the right to use, you are paying some consideration. And that is why in IND AS 116, of course, it's an outcome of IFRS 16. So globally, there was a change in the standard, and this was the biggest change which was made by IFRS 16, which was made by IND AS 116, where the concept of right to use come into the picture, and the lessee will capitalize the asset on the basis of present value of the lease rental for all the asset. Is that clear? Is that clear or not clear? Friends, that is why to cover this concept, to cover this thing, this problem, that is why this standard came, and this standard brought in these kind of changes. Okay. Is that clear? Is that clear, friends? So that is why this IND AS 17 was deleted and IND AS 16 was issued. Of course, IAS 17 was deleted and IFRS 16 was issued, and these are the outcome of these global standards. Clear? Now you have understood the difference between IND AS 17 and IND AS 116, right? So this was the biggest difference. Sir, in this particular case, we were debiting our P&L 1 lakh rupees every year. We were debiting our P&L 3 lakh rupees in the period of 3 years. But here we have only recognizing the asset and liability. So how the debit in the P&L will go? First of all, this asset 248685, this asset has to be depreciated over a period of 3 years, so that at the end of the lease, this asset value will become zero. So what is the accounting entry? Depreciation account debit. Of course, it's an expense. 2. Depreciation account debit 2. To what? To accumulated depreciation. To accumulated depreciation. In the first year, this will be the depreciation. This will be the depreciation in the first year. In the second year, same depreciation will be there, right? This is your first year. Same depreciation will be there in the second year, year 2, second year, and same depreciation will be there on the third year, right? Okay, so the total will be, if you will see the total will be how much? The same in the 3 years, 248685.20. Okay, this will be the total. Your asset will become zero. But sir, this is only 248. But in earlier we were debiting the P&L by 3 lakh rupees. Here only 248. Now what about the lease liability? What about the lease liability? Let's make a lease liability schedule. Let's make a lease liability schedule. You will find an interest here. Lease liability schedule, right? So depreciation, we have debited P&L by way of 248,685 as a depreciation. Now we have interest cost also. Year 1, 2, 3. Right? This is your year. This is your opening liability. This will be your interest cost. This will be your lease payment. This will be your closing liability. Okay. So what is my opening liability? Of course, it is 248,685. What is my interest cost? This multiplied by 10%. 10% was my discount rate. What is my lease payment? My lease payment will be in the first year 1 lakh rupees. What is my closing balance? Opening liability plus interest cost minus lease payment, right? In the second year, this will become my opening liability. I will pay an interest cost of 10%. I will pay a lease payment. My closing liability will be this much. This will become my opening liability. This will be my interest cost. This will be my lease payment. This will be my zero liability. How much interest cost I have paid? I have paid an interest cost of 51314.80, right? So I'll recognize every year interest cost account debit to lease liability, right? Interest cost account debit to lease liability. I'm just showing you the entire life cycle. In the first year, this will be my interest cost. In the second year, the compounding effect will be there on this interest thing. It will not straight line like depreciation. If I'll keep the total, so what will be the total? The total is 51314.80. In the P&L, in the first year, the P&L will hit by 1,07,000. In the second year, the P&L will hit by 1,250,000. In the third year, the P&L will hit by 91,985. in a period of 3 years, the P&L will be hit by 3 lakh rupees. You can see the P&L impact, you can see the P&L impact is nothing. The P&L impact is 3 lakh only. The P&L impact is 3 lakh rupees only. Right? The P&L impact is 3 lakh. Is that clear? Is it clear? This change was brought in by IND AS 116, right? IND AS 116. I want to give the context that what change is brought in by IND AS 116. Okay. Right, friends? We have discussed that what change is brought in by IND AS 116, right? We have discussed with one example. Now, friends, quickly, whatever we have discussed, let's summarize. In 2005, the Securities and Exchange Commission staff paper means, so they have come out, their staff has done some research and they have come out with a publication recommending the Financial Accounting Standard Board, like in India, Accounting Standard Board ICAI is there. In USA, Financial Accounting Standard Board is there, who is responsible for issuing the accounting standard in USA. And so Securities and Exchange Commission has recommended the Financial Accounting Standard Board and International Accounting Standard Board to revisit the accounting guidance for leases, right? And why? Because when they have analyzed, they found that the companies which are taken the asset on a which are taking a liability, which are taking a loan on then purchasing the asset, they are presenting the liability and asset both in the books of accounts. But the companies which are going to the second form of financing, which is leases, right? They are not recognizing the asset and liability in the books of accounts. And that is why they have recommended to revisit the accounting guidance for leases, right? And friends, even the US GAAP on leases, accounting standard codification 842, that standard was also changed in USA. Okay. In 2016, International Accounting Standard Board introduced IFRS 16, which had replaced IAS 17 and related interpretations. This standard was effective from 1st January 2019. Likewise, in India, in 2019, on 30th March 2019, Ministry of Corporate Affairs notified IND AS 116, which replaced IND AS 17. This standard was effective from 1st April 2019. This standard was effective from 1st April 2019. Right? Is that clear? This is what we have discussed already. Friends, what has changed and why? Accounting for lessee has changed significantly, like we have seen in AS 19, and IND AS 17, right? We are not recognizing this right to use asset, but in IFRS 16, IND AS 116, we are recognizing right to use asset, right? So moving off balance sheet financing to on balance sheet for lessee, like in our old version of IND AS or in our present accounting standard, we are putting the disclosure that what is my lease commitment, what is my lease payment commitment in the next 1 year, 1 to 5 year, more than 5 year. I am doing all these things, right? So I am showing my commitment over a non-cancelable lease period. But the point is, I'm not recognizing those commitment in my balance sheet. So my off balance sheet item are coming in the balance sheet now. Lessee will capitalize all the leases except for short-term and low-value leases. This we will discuss, right? We have not started the standard. I'm just giving you the context so that you will be able to understand this standard in detail. No substantial change in accounting for lessor. So whatever you are doing a lessor accounting in your AS 19, the same lessor accounting is there, right? Only some disclosure have been enhanced, right? But if I talk about the lessee accounting has completely changed. It has completely changed. Okay. The lessee accounting has completely changed. Clear, guys? So friends, now we have reached to the agenda. So now we are officially starting IND AS 116. This standard is a lengthy standard, and that is why 5 classes are there. I will discuss this standard in detail with lot of illustration, lot of example, lot of Excel examples, lot of layman language examples, and I will try to connect this standard with your day-to-day life. Okay, so that you will be able to visualize this standard. Right, guys? I believe all are comfortable so far. If you have any question, I would be happy to answer. If you don't have any question, I will be happy to move forward. If you have any question, please let me know. Tanisha, Abdul, Geeta, Shruti, Rahul, Kusuma, Viraj, Shailesh, please let me know if you have any question. Okay, Kusuma has responded, no sir, we are clear. Rahul, Rizima, good. Let's move forward. Right. Now let's talk about what is the boundaries of IND AS 116. What is the content which we are going to discuss in this particular standard? Friends, this agenda is from your ICAI study material only. Okay. So we are going to discuss about, first of all, overview. We have already covered overview, and we will be covering the objective of the standard, scope of the standard. Okay. Theoretical part, and whatever is the recognition exemption. Some exemption is given in this standard. We are going to discuss those exemption as well. What is a lease? Then we will discuss that definition of the lease, which is most important, right? So I would say identification of the lease or definition of the lease we are going to discuss. Whether arrangement contains a lease, whether a contract contains a lease or not contains a lease, we will discuss. We will discuss the identification of the lease from IND AS 116 perspective. We will discuss this concept of IND AS 116 lease, right? Whether a contract comes under IND AS 116 or not, right? Then we will be talking about separation of lease and non-lease component, right? For example, when you whenever you are taking a house on a rental basis, right, you are paying a lease rental, and you are also paying for your electricity and water. Okay, you are also paying. Sometimes you are paying for maintenance also, right, for security guard also. So how to separate the lease component and the non-lease component, we are going to discuss in this particular standard. Contract combination, so when two contracts will be combined or when a contract should be separated, we are going to discuss in this particular standard. We are going to discuss this aspect. Then some key concept we are going to discuss. Inception and commencement of lease we are going to discuss, right? What is the meaning of inception of lease? What is the meaning of commencement of lease? These aspect we are going to discuss. Lease term, what is meant by lease term, right? Most important aspect, because your accounting is happening, your accounting is depending on this lease term only, right? Like when the lease was for 3 years, you are recognizing the right to use over a lease rental for 3 years. When it is for 10 years, you have to recognize right to use asset over a lease term for the period of 10 years, right? So this lease term is very important, and we will be going to discuss what is the meaning of lease term, what is the definition of lease term. Then lease payments, what is covered under the definition of lease payment. We are going to discuss about that aspect also, that what is going to be covered under the lease payments. Discount rate, and so far you guys have well understood that we have to recognizing the right of use asset on the basis of present value, and present value will only be derived by using the discount rate. So it is important that what should be the discount rate, how to compute the discount rate, how to get the discount rate, we are going to discuss in this standard. Initial direct cost, right? For example, whenever you are entering into a lease contract, you have to pay the stamp duty for the stamp paper. You have to pay some brokerage commission, right? So these are the direct costs. These are the costs which is directly related to the acquisition of the leasehold premises. So these are known as initial direct cost, and what should be the accounting of initial direct cost we are going to discuss. And then what is the concept of economic life, fair value, we are also going to discuss these aspects. Then the most important aspect is the lessee accounting, right? That how to do the lessee accounting, how to recognize and measure the right of use asset and leasehold obligation. What happens in case of subsequent measurement? You have recognized your right of use asset, lease liability. Now what to happen further? Like I have shown you that right of use asset has to be depreciated over a lease term, right? And lease liability, the interest has to be compounded on the lease liability. Interest has to be compounded on the lease liability, and the payment has to be made on the lease liability, right? Then remeasurement will be there. Okay. In case if there is some remeasurement due to some lease modifications, change in the lease contract, how to deal with those remeasurement and lease modification, will cover that aspect. And some presentation and disclosure aspect we will be covering. Then lessor accounting is same whatever we have discussed in our AS 19, right? So it is same. So lessor accounting is simple, but lessee accounting will spend around 2 classes only on the lessee accounting. We'll cover a lot of illustration, we'll cover a lot of examples on this lessee accounting. Then lease classification we will be discussing in case of lessor accounting. In case of lessor accounting, the concept of operating lease and financial lease is there. But in case of lessee accounting, there is no concept of operating lease and finance lease. There is only a single lease model, right? Modification we will be covering here also, and presentation and disclosure. Then in other matters, we will be discussing the sublease and sale and lease back. So friends, if I have to give you the 4 important item in IND AS 116 from where ICAI is asking question, from where you will be getting a question in your interview as well. The number 1 is identification of lease. Identification of lease is number 1. Number 2 is lessee accounting. Number 3 is sublease. Number 4 is sale and lease back. These are the 4 most critical and most important aspect in IND AS 116, right? Lessor accounting is important, but it is same accounting whatever you have learned in AS 19. Okay. Is that clear, friends? But if I talk about the most important 4 aspects, number 1 is identification of lease, number 2 is lessee accounting, number 3 is sublease concept, number 4 is sale and lease back. These are the 4 most important and critical aspect in the entire IND AS 116, right? Okay. So if ICAI is asking a question on IND AS 116, out of 10 times, probably 8 times the question will be around these 4 aspects. Clear, friend? Is that clear? Parag has some question. Parag, you will be able to understand this question when I'll discuss further on this lease standard. So just allow some time. Okay, you will be able to understand all these aspects. Friends, in this lease standard, if I compare with older version of IND AS 17, of course, the definition of lease has been changed and a lot of additional guidance is there. If I talk about the balance sheet of leases, you have understood like in our old standard IND AS 17, in case of finance lease, the asset was there. In case of operating lease, no asset was there. But in IND AS 116, for all the leases, the asset will come and the liability will also come, right? In this case, in finance lease, the liability was there, right? And in IND AS 116 also liability will be there. But in operating lease, in the old version of IND AS, there was no asset and there was no liability, right? But in IND AS 116, now asset and liability both has come, right? In operating lease, the liability and asset was off balance sheet, right? Only in the disclosure in the notes to accounts you will be covering that aspect. The asset and liability you are covering only in the notes to accounts, not in IND AS. So not in the balance sheet, not in asset and liability, not in the balance sheet. You are only covering in the notes to accounts, right? But in IND AS 116, all the leases are required to be taken on the balance sheet as an asset and liability. Right, friends? In P&L, like in AS 19 or IND AS 17, you are showing the lease rental in the operating cost. But now in IND AS 116, this lease rental, instead of lease rental, the expense will come in the form of depreciation and interest cost and finance cost. Like I have shown you, the right of use asset has to be depreciated over a lease term, and the liability is also going to be, compounded with interest, and payment has to happen. Right. Right, friend? Highly impacted industries with IND AS 116, right? The industries which are having a leases on the balance sheet, right? Which are having a lot of leases. So they are the highly impacted industry. For example, if I talk about airline, if I talk about airline companies, aviation companies, Air India Limited, Indigo Airlines, Vistara, Air Asia. If I talk about these companies have the fleet of aircraft, and normally these aircraft are on lease basis. These aircraft are on leases basis, right? So if I talk about these companies, these aircraft are on leases basis. And friends, if you will see the balance sheet of these companies, these airline companies are disclosing right of use asset and lease liability in their balance sheet, right? Normally, these aircraft are on an operating lease basis, right? So prior to IND AS 116, they were not disclosing the asset and liability in their balance sheet. But after IND AS 116, they have a huge amount of liability and asset in their balance sheet. If you see the balance sheet of Indigo Airlines, you will find there is a right of use asset of 28,000 crore and there is a lease liability of 44,000 crore in their balance sheet, right? This is a listed company, and you can get the financials, you get the annual report from their website or from the BSE or NSE, right? Oil and gas industries. If I talk about these industries which are taken the premises on a lease basis, the space on a lease basis from the government, right? They have a huge leases on their balance sheet. Retailers. Let's talk about the Big Bazaar. Let's talk about Reliance Fresh. You must have seen a lot of outlet of Reliance Fresh, right? So these outlets are on a lease basis, right? So they have huge outlet across India. They have so many outlet across India and all the outlets on a lease basis. And this is how they have the asset and liability in their balance sheet. They have the right of use asset and the leasehold obligation. Telecom companies, you must have seen the towers. If I talk about Indus Towers Limited, Indus Towers has more than 2 lakh towers across all India. On a pan-India basis, they have more than 2 lakh towers, right? And all these towers are on a lease basis. It is not constructed on the own premises. It is constructed on the leasehold premises. So they have around, they have around 12,000 crore of right of use asset, and they have around 17,000 crores of lease liability in Indus Towers. If I talk about IT companies, these IT companies also have a lot of leases in their balance sheet, and they have a lot of right of use asset and leasehold obligation in their balance sheet. So these are the highly impacted industries by way of IND AS 116, right? And let me talk about my experience, right? If I talk about my experience, when I was in Bharti Infratel, right? I was in Bharti Infratel and I was heading financial reporting in Bharti Infratel. It was a tower infra company, and it was a debt free company. It was a tower infra company, and it was a debt free company. Okay. Friends, this IND AS 116 came on 1st April 2019. On 31st March 2019, when I left office, when I left from my office to my home, right? So on 31st March 2019, my company was a debt-free company. Bharti Infratel was a debt-free company. But when I reaches on 1st April 19 to my office, when I sit on my workstation on the chair, my company become a debt company. What happens overnight? So guys, when I left the office at around 11:30 in the night, because we were doing the annual closing. When we left the office on 31st March, it was a debt free company. But when I reaches the office next day on 10 a.m., it become a debt company. What happened? What happened overnight? Have we taken loan overnight? I'm only talking about 10 hours. I'm only talking about within 10 hours, right from night to morning, this company become a debt company. How come it is possible? Can you tell me how this magic happened? Yeah. Rahul, you are bang on. You are right, Rahul. This magic happened just because of applicability of IND AS 116, right? In IND AS 116, you have to debit your asset and credit your liability. Credit your leasehold liability. And this leasehold liability is like a debt. It is like a debt, right? You remember I told you lease is another form of financing. So it comes under the definition of borrowings. It comes under the definition of debt, right? So it is just due to the applicability of IND AS 116. In the old standard, this company was neither recognizing asset nor recognizing liability. They were only recognizing the lease rental expense whenever they were paying the expense, paying the lease rental. But after IND AS 116, they need to capitalize all the right of use asset and they need to credit the lease liability. And this is how the debt of 2000 crore came into the balance sheet of Bharti Infratel Limited. This lease liability came into the balance sheet. Right, friends? Is that clear? You have understood the magic of IND AS 116? Yeah? Very good. So what is the objective of IND AS 116? The objective is pretty simple. The objective is this IND AS 116 takes care of the accounting and reporting of all the leases in the books of the lessor and in the books of the lessee. And when I'm talking about accounting and reporting means recognition, measurement, presentation, disclosure. Right. This IND AS 116 shall be applicable to all the leases, including right of use asset, right? Including right of use asset in a sublease, except for. So this IND AS 116 is applicable to all the leases, except some negative list is given, right? Some exclusions are given. What are those exclusions? If there is a leases to explore for or use mineral oil, natural gas, and similar non-regenerative resources, for example, Adani has got some mining rights from the government of India. Adani has got the coal extraction right. Vedanta has got the aluminium or copper extraction right, mining rights from the government of India. So that comes under the scope of IND AS 106. It will not come under the scope of IND AS 116. Leases of biological asset held by the lessee. If lessee has taken a cow on a lease basis, right? For example, the lessor has a cow and the lessor has given this biological asset to the lessee on a lease rental basis. So this lease of cow biological asset comes under IND AS 41, right? I'll cover this IND AS 41 also. After this IND AS 116, after completion of IND AS 116, I'll cover this IND AS 41 as well, right? IND AS 41 as well. So this biological asset lease is covered under IND AS 41, not under IND AS 116, right? Service concession arrangements. This service concession arrangement is covered under IND AS 115, revenue from contract with the customer. You understand what is service concession arrangements? You must have seen the toll plaza, right? I'm sure that You guys have seen, you guys have, uh, of course, whenever you traveled, you must have paid a toll tax in your lifetime. You must have seen the toll plaza, right? So if you guys have focused about the toll plaza, the name of the company is also mentioned in the toll collection slip, or in the hoarding which is there on the toll plaza. Let's say the name of the company is Roy Constructions and Highways Private Limited, right? This is a private company which is maintaining the toll plaza, which is collecting the toll as their income. But this entire highway, the road belongs to the government, right? The government has given, the government has given this highway, this road to this toll plaza company. Why? So that this toll plaza company will develop this highway, will develop this road, and it will hand over to the government after a certain period of time. For example, 20-year, 30-year, right? And for 20, 30 years, they will collect toll and they will earn the income. So this arrangement is known as a service concession arrangement, right? It's not like that the government has given this infrastructure to this private company for a period of 20-year or 30-year. So it will be a lease contract. It will not be a lease contract. This arrangement is known as a service concession arrangement, and it will be covered. It is already covered in Appendix D of IND AS 115. Probably you guys have had a session on IND AS 115. Have you guys completed IND AS 115 or still it is pending? Whether IND AS 115 is already covered or it is not covered? Yeah, not covered or covered? Okay. So fourth, so this service concession arrangement is outside the scope of IND AS 116. Licenses of intellectual property granted by a lessor. Right. Again, let's say if I have developed some prototype, I have developed some formula, and I am giving a right to some company to use my formula, right? So it will be covered under IND AS 115. It will not be covered under IND AS 116. Rights held by a lessee under licensing agreement for such item as motion picture films, video recording, plays, manuscript, patent, and copyright. For example, which movie you have seen recently? Which movie you have watched recently? Gadar 2, right? Probably. Let's say if PVR got a right to play, to screen this Gadar 2 exclusively. So let's say if this Gadar 2 will be, there on the screen also of PVR exclusively. So other theaters will not get the right to screen the Gadar 2 movie. Only PVR is getting the right to screen the Gadar 2 movie. And why there is an exclusive right? Because they are paying a premium to acquire that exclusive right, so that they will earn a lot of revenue out of that. Right. So again, these kind of rights which is held by the lessee under this licensing agreement for like motion picture, film, video recording, plays, manuscript, patent, and copyright. So this will be under the scope of IND AS 38, not under the scope of IND AS 116, right? Not under the scope of IND AS 116. Is that clear? Is that clear? Is it clear, guys? Yeah. So friend, now we have reached to the, you remember I told you four aspect: identification of lease, lessee accounting, sale and lease back, and sublease concept. We have reached to the most important first concept in this particular standard, right? It's 8:20 now. Friends, let's have a 10 minutes break and we will start at 8:30. We will start at 8:30, okay? And then I will be covering this most important aspect of identification of a lease, right? Let's have a 10 minutes break. is the definition of the lease and identification of lease contract, right? So before talking on identification of a lease contract, let's talk about the definition of the lease. Okay. Friends, if I talk about the definition of the lease, you guys must have seen the lease contracts, right? For example, if I talk about the lease contract, how these lease contracts are structured, these lease contracts are structured. First of all, there must be the two parties in the lease contract, right? There must be the two parties, lessor and lessee. And in a typical lease contract, there are two parties where the lessor is there and the lessee is there. Okay. And if you have seen the lease contract, there is a detail of the asset. For example, Mr. ABC is giving its second floor situated at plot number 60, Vaishali, Ghaziabad, pin code 202025. Okay. So the detail of the asset is also mentioned in the lease contract. Means the parties are there, the underlying asset details are there, the underlying asset is there, which is the subject of the lease, and the lease term is there, right? And the consideration is there. For example, Mr. ABC, who is the owner of property number XXXXX, is providing this property to Mr. Y on a lease basis over a period of 3 years for a monthly lease rental of, let's say, 50,000 rupees. And the rights and obligation of the lessee is also mentioned in the contract, right? That what are the rights of the what are the rights and obligation of the lessee? For example, the lessee will be given a smooth access at all the time for this rental premises, right? There will not be any intervention of the lessor in the premises which is given on the lease to the lessee, right? So some rights and obligation will be given. The obligation is lessee has to pay the rental on a monthly basis by, let's say, 5th of the every month in advance. Or it can be the lessee will not, the lessee will not, the lessee will not entertain any illegal activity in that business premises. Okay. For example, in many cases, the lessor only wants to provide its premises to the lessee who are the families, right? They don't want to give their premises to the students, right? So many lessor think about that, think in that way. So friends, if I talk about the typical lease contract, the lease contract has two parties. The lease contract has an underlying asset. The lease contract has a lease period, and the lease contract has a consideration, right? And the rights and obligation. And if I talk about the definition of lease in Accounting Standard 19, the definition of lease talks about lease is a contract where the lessor conveys the right to use. The lessor conveys the right to use of an asset to the lessee over the lease period in exchange for a consideration. Again, I am repeating, and please hear me clearly. Please hear me patiently. Please hear me properly. Lease is a contract where lessor conveys the right to use of an asset, in favor to the lessee, of an underlying asset, for a specified period of time in exchange for a consideration. This definition under AS 19 talks about when the lessor transfers the right to use of an asset, right? Of an underlying asset. So if I talk about the parties, asset, time, consideration, these four key item is there in IND AS 116 also. Because we are talking about contract, we are not talking about standard, we are talking about contract. So all the lease contract will have at least these four items: parties, asset, which is a subject matter of the lease, specified period of time, and consideration. If I talk about the definition in accounting standard was when where lessor conveys the right to use the asset, right? So from the right to use in IND AS 116, the definition comes as a right to control the use, right? In accounting standard, the word was right to use. But in IND AS 116, the word right to control the use comes into the picture. Right to control the use, right? Lease is a contract where the lessor conveys the right to control the use. In accounting standard, the word was use. In IND AS, the word is right. The word is control the use. So in the first case, we were using the asset. In the second case, we are controlling the use of the asset. We are controlling the use of the asset, right? In accounting standard, the word was asset. In IND AS, the word is identified asset. The word is identified asset. The word is identified asset. So friends, lease is a contract whereby the lessor conveys the right to control the use of an identified asset for a specified period of time in exchange for a consideration. Is that clear? Is that clear? Is that clear? So now for identification of lease, we will be discussing two key terms. Number one, we will be discussing the meaning of identified asset. Second, we will be discussing the right to control the use, meaning of right to control the use, right? And if I talking about the specified period of time, it means it is talking about lease term. We will be talking about lease term then. And in exchange for a consideration means we will be talking about the minimum lease payments, the lease payment, the lease rental. So we will be talking about the identified asset. We will be talking about right to control the use. We will be talking about the lease term, and we will be talking about the lease consideration, which is lease rental. Right? Is that clear? Is that clear, friends? We will be covering this four aspect. Is that clear? As a first aspect, because it's a new aspect, that what is meant by identified asset. For any contract to be covered under IND AS 116, there must be an identified asset. Now, what is meant by identified asset? Friends, whenever you have seen a lease contract in case of properties, please write down on the chat box if you have seen any lease contract during your article, say during your, probably you guys have let out your premises, or you guys are living on a rental basis, or you guys have seen some lease contract during your articleship period. Please let me know. Have you guys seen any lease contract for some properties like offices, houses? Have you seen any lease contract? Have you seen any lease contract? Yeah. Have you seen any lease contract? Yes. Nisha is saying yes. So if you have seen a lease contract, you must have seen that in the lease contract, in the case of the lease contract relating to the properties, the premises, the subject, the underlying asset of the lease is explicitly mentioned. Like if you are taking a property on a lease basis, the address of the property is clearly identified, clearly mentioned in the lease contract. For example, if I have seen my lease contract, in the lease contract, it was written that, the lessor, let's say Mr. Rohit Khandelwal, is giving his premises number situated in XYZ society bearing a flat number A802, okay, in the vicinity of sector 30, right? And sector 30 part 2 Gurgaon, pin code number this, landmark Bikaner wala, near Bikaner wala. So if I talk about this lease contract, the underlying asset, the property, the address of the property, where it is situated, right? What is the flat number? What is the floor number? Society, pin code, sector, everything is clearly mentioned in the contract. So if I talk about the lease contract relating to the properties, right? The asset is explicitly mentioned in the contract. The asset is explicitly mentioned in the contract. So friends, in case of an identified asset, the identified asset is explicitly or implicitly mentioned in the contract. Explicit, I have given an example. What is meant by implicit? What is meant by implicit? For example, for example, there is a lessor, right? And lessor has imported a particular machine, or let's say lessor has imported a particular car from UK. He has only one car, right? And that is a very specialized car, very specialized car. It is not a normal car, it is a very specialized, very special car. And the lessor has leased that car in the favor of the lessee, right? And lessor has only one car, and lessor cannot purchase another car, another that kind of car. He has only one car. In the lease contract, instead of writing the car number, make and model, the lessor has simple written that the lessor is transferring this specialized car in favor of the lessee. The lessor is giving a right to use of this specialized car in the favor of the lessee. The car number, registration number, etc., is not mentioned in the contract, right? Since lessor has only one car, and that was the only specialized car, right? So in this case, even the details are not mentioned. Still, it will be considered as this asset is implicitly mentioned in the contract, right? The asset is implicitly identified in the contract. This is the meaning of implicit. So for any underlying asset to be considered as an identified asset, either it is explicitly mentioned in the contract or it is implicitly form part of the contract. Is that clear? Is that clear? Yeah. Now, sir, in that case, every lease contract, every asset will be considered as an identified asset under IND AS 116 in case of a lease contract. Answer is no. So an asset will be considered as an identified asset if it is explicitly or implicitly mentioned in the contract, except friends, when you read the standard, you will find a different wording at a lot of places. For example, you can see a particular wording known as supplier. So what is meant by supplier? Supplier means lessor. In context of IND AS 116, supplier means lessor. Okay. So friends, the asset will not be considered as an identified asset, even though it is mentioned in the contract. The asset will not be considered as an identified asset if the lessor has a substantive right to substitute the asset throughout the period of use. If the lessor has a substantive right to substitute the asset, what does it mean? What does it mean? अगर लेसोर के पास सब्सटेंटिव राइट है उस एसेट को सब्सटीट्यूट करने का, तो वो आइडेंटिफाइड एसेट नहीं मानी जाएगी. व्हाट डज इट मीन? आई विल एक्सप्लेन विद द हेल्प ऑफ एन एग्जांपल. हैव यू गाइस वेंट ऑन अ ऑडिट ऑफ पब्लिक सेक्टर अंडरटेकिंग्स? For example, ONGC, GAIL, bank audits, right? In my articleship period, I went on a bank audit. Right? So Manoj, I'm explaining that, and I'm explaining this concept with an example. In my articleship days during 2004, I went on an audit of a public sector undertaking, PSU, government company, right? And we were there for an audit of for audit at their plants, at their factories for 2 months. And to our surprise, so whenever you went to the audit of these big companies, you will found that they will give you they will provide you the accommodation in their guest house, right? So there is a car like Innova, Bolero, Scorpio. These cars are generally there, and these cars will be used to pick you from the guest house to the office, guest house to the factory, and these cars deployed will be deployed by the company for their guests, for their employees, etc., etc. So we were there for 2 months, and to our surprise, we have seen that a particular car like Innova, like Toyota Innova car, right, white color, and even the nameplate, when we see the number plate, not nameplate, number plate, even the white Innova car bearing the same registration number has picked us for 2 months, for completely 2 months. So I have asked the manager, who was a finance manager, I asked him that how this vendor is managing that he is sending the same car to pick me every day, right? Same car means even that car is bearing the same registration number. So then that finance manager explained me, sir, whenever we float the contract, whenever we float the tender, let's say we have always floated on a yearly basis, we are floating a tender for hiring 20 cars, right? And whenever we are floating a tender, we are mentioning the make and model, right? Make and model means, for example, we need 20 Toyota Innova cars. We need 20 Toyota Innova cars. Number one. Number two, these cars are manufactured on or after, let's say, 1st April 2020. Okay. And whenever we finalize the contract, lease contract for these cars, so the vendor has given us the list of the cars with the registration number along with the registration certificate, copy of the registration certificate, that these are the 20 cars, white Innova, manufactured after 1st April 2020, bearing the registration number DL1X2020, DL1X2021, DL1X2121, right? So these are the 20 cars bearing these registration number will be there for you always, right? Will be there for you always. So I asked him, okay, it means the vendor does not have substantive substitution right. Means the vendor cannot replace these car with the other car. The finance manager said no. So I told him, okay, it means, and you guys have already hired all the new cars, all the latest cars. So let's say if this vendor has only these cars, and tomorrow if some of his customer is demanding that please send me 2 new Innova cars to pick my special guest, so whether that vendor will not use these 2 cars for its customer, for its different customer, the finance manager said no, कि ये कार हमारे लिए डेडिकेटेड है, कॉन्ट्रैक्ट में लिखा हुआ है, मेंशन है एक्सप्लिसिटली कि ये कार इस कंपनी के लिए होगी, एंड दिस वेंडर कैन नॉट यूज दिस कार फॉर अदर कस्टमर, राइट? So I said, okay, this means this vendor does not have substantive substitution right, and he will not get any benefit from this substantive substitution. He will not get any benefit. He said, no, sir, He will not get any benefit, right? He said no. Okay. So I said, okay. I said, okay. What does it mean? It means in this case, if this vendor wants to, capitalize the opportunity where if tomorrow the vendor think that, okay, let me use these new cars for my alternate customer, and let me, because already the contract has been signed and I'll get a good amount because there is special guest is coming, so I can charge a good amount there, and let's send the old cars to this company and the new cars to that company, right? Okay. So friends, in this case, the vendor does not have, the supplier, the lessor does not have substantive substitution rights. The lessor does not have substantive substitution rights. In this case, lessor does not have substantive substitution rights, and that is why, this asset will be considered as an identified asset. What happens if the lessor has a substantive substitution right? For example, the lessor and the lessee has entered into a contract where lessor will say that I will make 20 cars available for you. I will make 20 cars available for you. Okay. I will make 20 cars available for you. As simple as that. So today he is sending, let's say, the car which is bearing serial number XYZ. Tomorrow he is sending the car which is bearing serial number PQR. Day after tomorrow ABC. It means it has a substantive substitution right. It can rotate its fleet as per its own requirement, as per its own benefit. It can rotate. In that case, this asset will not be considered as an identified asset. Sir, in both the cases, the company will pay a lease rental, right? And when you are saying it is not an identified asset, what does it mean? It means if it is not an identified asset, it will not come under the purview of IND AS 116. Sir, if it will not come under the purview of IND AS 116, then what will you do? What accounting you will do? In that case, the accounting which you will do is simple a rental expense accounting. You are not required to capitalize the lease rental. You are not required to capitalize the right of use asset and lease liability, right? You have to do only rental expense accounting. Is that clear? Is that clear, friends? Now I have also asked one question. Sir, you are saying that, these 20 cars bearing these serial number, registration number will always be available to you. For example, car being a machine, it has to get the service also, right? It has to get some minor repair services. What happens in that case? Let's say this car will take 2 days or a day for the service. So in that case, the finance manager told me, Mr. Alok, in case of some breakdown, in case of the service requirement, in case of repair and maintenance, of course, in that case, the vendor, the lessor will provide me the alternate cars. But in normal scenario, these cars are completely dedicated to me. The lessor cannot use these cars for the other purposes, right? So in this case, the substantive substitution right is not with the lessor. The lessor can replace only in case of some emergency like breakdown, repair and maintenance, major maintenance, right? Service. In that case, it can only do that. Otherwise, it cannot, right? Is that clear? So when you can consider that the rights are substantive, the lessor has a substantive substitution right. The lessor has a substantive substitution right only when two conditions will be fulfilled. What are the two conditions? The lessor has the practical ability to substitute the alternate asset throughout the period of use. The lessor has a practical ability. Second, the lessor must be economically benefited by doing so, right? For example, which I have taken, let's say the entire new fleet of car, the lessor has given to the particular lessee, and if the lessor will use this new fleet to for some other customer, probably he will get some good returns, right? He will get some good returns. So after signing of the contract, if the lessor has a practical ability to replace, to change, or to provide, or to substitute the alternative asset, right? In that case, and by substituting the alternate asset, the lessor is actually benefited by doing so. In that case, it will be considered that the rights are substantive. For example, if the lessor has two cars, let's say I'm taking one example. Both are Innova Krista. Both are, the manufacturing year is 2022, December 22 model. Both cars. December 22 model Innova Krista. One is serial number, registration number, let's say DL 1Y 2020. The another one is DL 1Y 2025. Same car, same color, everything is same. So lessor, and in the contract, the registration number is 2020. Instead of sending 2020, the lessor has sent 2025. So you will say that, sir, he has substituted the alternate asset. But tell me, by sending 2025, whether lessor will be economically benefited by doing so? Of course, answer is no. Answer is no. Right? Because whatever lessor will earn from some alternate customer, by sending 2020, it will earn the same amount by sending 2025. So the lessor is not economically benefited by doing so. It means the rights are not substantive. The rights are not substantive by the lessor. The rights are not substantive. Is that clear? So what, lessor को फायदा क्या होगा? दूसरा एसेट भेजने से lessor को क्या फायदा होगा? The lessor will not have any benefit by substituting the asset, because both the assets are identical. It is same, right? So, but let's say the new car is 7-seater car. The old car is 5-seater car. I'm just taking an example. So instead of sending the 7-seater car, the lessor has substituted with 5-seater car. Why? Because the lessor got a customer who is asking for a car which is having a 7-seating capacity. So the lessor will earn more money by sending this 7-seater car to that ad hoc customer, and he has replaced this 7-seater car with the 5-seater car to the existing contract. So in this case, the lessor has a practical ability to substitute with the alternate asset, and he is economically benefited by doing so. Right? Are you getting me? So first of all, there must be practical ability to substitute. And how you will determine whether he is a practical ability to substitute or not? By reading the contract. Whether in the contract, whether this asset is dedicated or not. Right? If this asset is not dedicated and it is written that the lessor can replace, the lessor can substitute the alternate asset, in that case, it will be considered as the lessor has substantive substitution rights. Okay. And you will not cover this contract under IND AS 116. I'll give another practical example. Have you guys went on airports? Have you guys went to airport? Have you guys went to the airport? So when you reached airport, you must have seen the airline counters where you are getting your boarding passes, you are submitting your luggage, right? You are getting an airline counters. You can see the airline counters. You know, these airports belongs to Airport Authorities of India, right? These airlines are the private companies. Okay. So these airline companies got a space by the Airport Authority of India. You must have seen the 5, 6, 7 counters, right? These airline companies are paying rental. For example, if they have occupied, let's say 1000 square feet of area. So they are paying a rent of, let's say for 1000 square feet, they are paying a rent of 100 rupees per square feet. So they are paying a rent of 1 lakh rupees. Okay, they are paying a rent of 1 lakh rupees on a monthly basis. So now the contract, if you read the contract of the aviation companies, Airport Authority of India will not provided the dedicated space to them, and they always have a substantive substitution right. The Airport Authority of India has always the substantive substitution rights. For example, the Airport Authority of India says that I have to give you 1000 square feet of space, right? I'm not guaranteeing you that whether I'll provide you the space in front of gate number 5 or gate number 6 or whatever gate. I will be giving you 1000 square feet. For example, today the airport authority has given me a space in front of gate number 5. Tomorrow, if some bigger airline will come, right, and that airline will provide a more premium, or tomorrow airport authority wants to provide that space to some food outlet, food giants, right, or to some other product sellers. So they will give that space on a gate number 5 because there is a lot of footfall came from gate number 5, and at gate number 5 they will give this space to some other customers, to some other lessees, and they will shift this airline counters to some other gates, in front of some other gate or at some other area. It means the airport authority has a substantive substitution right to replace, to substitute the alternate space to this aviation company, airline company. So in these kind of lease contract are not come under the purview of IND AS 116. Why? Because the lessor has a substantive substitution right, and the lessor is economically benefited by doing so. And that is why this will not be considered as an identified asset, and these companies are not doing IND AS 116 accounting. Sir, then what they are doing? Whatever lease rental they are paying, they are charging it to expense. Okay. Parag is asking, sir, in case of car hiring example, if agreement is for 12 hours in daytime, is it considered substantive right to substitute? So Parag, in that case, let's say the dedicated time is 12 hours. Okay. So for example, the vendor says that, my car cannot run for 24 hours, right? To maintain a healthy car, to maintain my car, I will allow you only 12 hours in a day. Okay. And my car will be available with you for the 12 hours. And after 12 hours, this car will come to me. Okay. This car will be there in my garage. And at morning 7 a.m., this car will be available at your place. Right. In this case, if it is an identified asset, in those 12 hours time, the lessor does not have a practical ability to substitute the asset, it will be considered as an identified asset. It will be considered that in those 12 hours, right, the lessor does not have a substantive right to substitute. Clear? Is that clear, Parag? Is that clear? I hope it is clear to all of you. Friends, now I am moving to my Excel file. Please confirm if my Excel file is visible. So lease contract. What is a lease contract? Lease contract is a contract where the lessor conveys the right to control the use of what? Of identified asset, right? For a specified period of time. Means lease term. In exchange for a consideration. Means lease payment. Rental. Right? These are the four aspects we have read, we have understood. Aspect. Now, while discussing the aspect of identified asset, we have understood that identified asset for the lease asset to be identified asset, it has to be explicitly or implicitly mentioned in the contract, right? The asset will not be considered as an identified asset if the lessor has a substantive right to substitute the asset, right? For example, airport authority has provided the 1000 square feet space to ABC Airlines, airlines in front of its gate number 5, right? Airport authority has provided airport authority has provided the 1000 square feet space to ABC Airlines in front of its gate number 5, right? Is it an identified asset mentioned in the contract? Let's say, let's discuss about these aspects. Explicit oblique implicit in the contract, right? Substantive right to substitute. In this case, it is explicit or implicitly mentioned in the contract. Answer is yes. Substantive right to substitute, no. No, right? There is no substantive right to substitute, no. Same example, airport authority has provided 1000 square feet space to ABC Airlines in front of its gate number 5. The authority can change location in future as per its discretion, right? Now tell me whether it is explicitly implicitly mentioned in the contract. Yes, in the contract it is at gate number 5 mentioned in the contract, but this location can change, means it can alter. So whether substantive right to substitute is available with the lessor, answer is yes. Right? So in this case, whether it is an identified asset, answer is yes, it is an identified asset. Yes. As per IND AS 116. In this case, is it identified asset? No, it is not an identified asset. No. Right? In this case, IND AS 116 will be applicable. In this case, IND AS 116 will not be applicable. In this case, right of use asset accounting will be applied. In this case, right of use asset accounting will not be applied. Is that clear, friends? Is that clear to each one of you? Yeah? Is that clear to each one of you or not? Nisha, Shruti, I am trying to discuss this concept in a very layman language examples, right? Otherwise, when you read the standard, you will find it very complex. But when you understood this standard, you find it very easy. I can guarantee you, right? So we understood this aspect, okay? And rights are substantive. Rights will be considered as substantive only if he has a practical ability to substitute and he would be economically benefited by doing so. If the rights or obligation to substitute becomes exercisable only on occurrence or non-occurrence of an event, then these rights are not substantive. For example, the car will be replaced in case of a breakdown. For example, the existing car met with an accident, right? So of course, if it is met with an accident, so this car needs repair and maintenance. And in repair and maintenance, it will take some time, right? So in that case, the lessor will substitute that asset with the alternate asset. In that case, it is okay. You will not say that, because in that case, lessor is not getting any benefit. If that car got accident and he is replacing that asset, so he is not economically getting benefited, right? He is providing this alternate asset in case of an emergency situation, right? Is that clear? Now we will discuss some example from ICAI study material. Then we will be moving on the second aspect of right to control the use. Asset implicitly specified in a contract. Implicit. Customer XYZ enters into a 10-year contract with the supplier ABC for use of rolling stock specifically designed for customer XYZ. Rolling stock means like, basically like coaches, coach, or I would say lorry to transport the material. Okay. So customer XYZ enters into a 10-year contract. The lease period is 10 years. Okay. And supplier ABC means lessor. So supplier means who is supplying the asset. So lessor. And it is rolling stock. Let's consider this as a coach or a bus, let's say. And this is specifically designed for customer XYZ. See, this supplier ABC is giving some asset on a lease basis for a 10-year contract. And this asset is specifically designed for this customer. Means it is dedicated for this customer. There is no, so it is not for the general purpose, not for the general use. It is specifically designed keeping in mind to this customer. The rolling stock is designed to transport material used in customer XYZ production process and is not suitable for use by other customers. See, this particular coach, this particular, rolling stock is designed which can facilitate only the customer XYZ production process and it is not suitable for other customer. So in this case, even though the features, the details of this rolling stock may not have been written in the contract, do you think that it is not an identified asset? It is an identified asset because it is implicit in the contract, because it is manufactured for that lessee. And in this case, whether the lessor has a substantive substitution right, this asset is manufactured for this lessee only. The lessor will not be getting any benefit by replacing this asset with some other asset because the lessor cannot use this asset to other customer. because it is manufactured for this customer only, right? So the rolling stock is not explicitly specified in the contract, but supplier ABC owns only one rolling stock that is suitable for customer XYZ use. Although it is not explicitly mentioned in the contract, but this supplier, this lessor owns only one rolling stock and it is only suitable for this customer. If the rolling stock does not operate properly, the contract requires supplier ABC to repair or replace the rolling stock. In case of a damage, in case of a service requirement, in case of a problem, this supplier will either repair or replace the rolling stock. Whether there is an identified asset, whether this rolling stock is an identified asset, yes or no? Even though it is not explicitly written, it is implicitly in the contract. Why? This lessor has only one rolling stock and it is manufactured only for this lessee. Right? It is manufactured only for this lessee. Right? Though the rolling stock is not explicitly identified in the contract, not specifically specified in the contract, right? As I have told you, for example, the registration number, the vehicle number is not mentioned in the contract, but it is implicitly specified because the supplier has to fulfill the contract. It is implicitly identified in the contract, right? It is implicitly identified in the contract. Is that clear? Is that clear, friends? Second example, customer XYZ enters into a 10-year contract with a supplier ABC for the use of the car. The specification of the car is specified in the contract, like brand, type, color, options, etc., etc. At inception of the contract, the car is not yet built. Whether there is an identified asset? Yeah. Is it an identified asset? Yes, the said car is an identified asset. Though the car cannot be identified at the inception of the contract, it is implicitly specified at the time the same will be made available to the customer XYZ. Right? Is it clear or not clear? Is it clear or not clear? The illustration number 4. So in the first two illustrations, we talked about whether it is explicitly mentioned in the contract or it is not mentioned in the contract, right? Whether it is explicit in the contract or implicit in the contract. Now we are also discussing the substantive substitution rights. An electronic data storage provider, electronic data storage an electronic data storage provider supplier. As I told you, in this standard, you will find the word supplier also. So don't be worried about that. The supplier means lessor. An electronic data storage provider, a supplier, provides services through a centralized data center, right? Involve the use of a specified server number 10. The supplier maintains many identical servers in a single accessible location and determines at inception of the contract that it is permitted to and can easily substitute another server without the customer consent throughout the period of use. You must have heard about the data center service providers. The data center service provider, for example, the Nextra data center. So there is a company of Bharti Group Company, Bharti Airtel Group Company, and the name is Nextra Data Services Provider. Nextra Data Limited. What these companies are doing, these companies are providing the servers. For example, I am a company and so I have a million and billions gigabytes of data. This company will provide me the server, this company will charge the rental, and this company will provide me the server on which I have to store my data, right? And likewise, so they have created a data center, like this Nextra has a data center in Bangalore, they have a data center in Noida, right? So they have created a huge premises or a data center where they are storing the data for different companies through their different servers. So they have one space where multiple servers are located, and they have given me the server number 10, and my data will be stored in server number 10. So it is more like a hard disk, let's say. It is more like a hard disk. So let's say there are 10 hard disks, and my data is stored in this hard disk number 10. And each server, each hard disk is serially numbered, right? But at the inception of the contract, when I have entered into a contract with this company, what is written? That it is permitted to and can easily substitute another server without the customer consent throughout the period of use. So in the contract, it is mentioned that the service provider, what he can do, the service provider can transfer my data from server number 10, hard disk number 10 to, let's say, hard disk number 8, right? And he is not requiring my consent. Further, the lessor or supplier would benefit economically from substituting an alternate asset, because doing this would allow the supplier to optimize the performance of its network at only a nominal cost, right? And why he is doing this? Probably he is optimizing its network. Let's say what happened. Let's say he has given me a hard disk of, for example, 1 TB, 1 terabyte. And and so he has given me that server. And on that server, my data is only for 500 GB, right? So that supplier, that lessor has, let's say, 5 hard disks, 10 hard disks. One hard disk is 1 TB and the another hard disk is 512 GB. My data is less than 500 gigabyte. So what he is doing, he has got a customer whose data is close to, let's say, 800 gigabyte. So he wants to provide this space to that customer, and he wants to shift me to some lower space server. By doing this, he is getting economically benefited, or he is doing this cleanup exercise, he is shifting the data from this server to this server, probably to optimize its network also, right? So in this case, if you will see the contract in this case, in addition, the supplier has made clear that it has negotiated this right of substitution as an important right in the arrangement, and the substitution right affected the pricing of the arrangement. And what this supplier lessor is saying, see, I have the right to substitute, I have a substantive right to substitute, and due to this, I have given you a better price, right? For example, if you will say that, no, you cannot substitute this server with the other server. You cannot transfer my data to other servers without my consent, or you cannot transfer even with my consent as well. So in that case, this lessor is saying the pricing would be different. Today, I am charging you, let's say, 10,000 rupees per month. If this would have been the case, I would have charged 15,000 rupees per month, right? So lessor has made it clear that since I have the substantive right to substitute, and that is why I have given you so many benefit, and that is why my rental, which I am charging from you, it is very competitive and very cheaper in comparison to the market rate, right? In comparison to the market rate. So now the question is whether the substitution rights are substantive, and whether there is an identified asset, whether the substitution right are substantive and whether there is an identified asset. Tell me, is it there or is it not there? Whether substitution right is substantive, is it an identified asset? Answer is no. Yes, the substitution right is substantive, and that is why it is not an identified asset. It is not an identified asset. Is it clear, friends? Is it clear or not clear? Whether this question number 1 is clear or not clear? Please tell me. Is it clear or it is not clear? I am waiting for your answer. Is it clear? Question number 1. I got the response from 3 students. What about others? Is it clear in mind? Okay. Okay. Yeah. What about question number 2, scenario B? Assume the same facts as in scenario A, except server number 10 is customized and the supplier does not have the practical ability to substitute the customized asset throughout the period of use with the other customer. Additionally, it is not clear in the contract whether the supplier would benefit economically from sourcing a similar alternative asset, whether the rights, substitution right are substantive, and whether there is an identified asset. Tell me what will be your answer in scenario number B. Question number 1, whether the substitution right are substantive, whether it is an identified asset. Question number 2, whether it is an identified asset in scenario number B. In scenario number A, the substitution rights are substantive. Answer is yes. Whether it is an identified asset, answer is no. In scenario B, the question is whether the substitution right to replace, is substantive and whether it is an identified asset. Tell me, guys. Tell me. In the scenario number 8 is very much clear. It is written in the question that although the supplier, the lessor, has provided the server number 10 to store the data of the company, but this lessor has told 2 things. Number 1, he has told that, see, I can transfer your data to other servers without your consent. It means the right to replace is there, right to substitute is there. Second, it is also mentioned that the supplier would benefit, the lessor would be benefited economically by transferring this data, okay, to the other servers by replacing this storage space, right? And it is further written that the price which was negotiated, right, it was a very competitive, very cheaper price. And why this price is given? This price is given because the lessor wants to keep the substantive substitution right, and that is why the lessor has given the price as a very competitive price. The lessor has given a very competitive price. Clear? Is that clear? Is that clear, friends? Yeah. Scenario number B. Scenario number B, in this case, substantive substitution right is not there. And yes, the identified asset, it is an identified asset, right? The substantive substitution right is not there. And yes, it is an identified asset. Is that clear? Right? This is the solution which is given. Now let's come to the next part, which is right to control the use of an asset. Right to control the use of an asset. Friends, while talking about right to control the use, right to use is a different aspect, and right to control the use means who is controlling the use, who is determining that what should be the use of this asset. So the right to control the use of an asset will be established by 2 aspects. Number 1, right to obtain substantially all of the economic benefit from the use of the identified asset. Right to obtain substantially all of the economic benefit from the use of the identified asset. Question number 1, who is getting the economic benefit from using the asset? Who is getting all the economic benefit from using the asset? I'm talking about from use of the asset. I'm not talking about from sale of the asset. Are you getting me? Because in case of a lease contract, you will not have a right to sell the asset. You will have a right to use the asset. And that is why right to use is capitalized. Yeah. So number 1, who is getting the right to obtain, who is getting a right to have the economic benefit from use of the asset? Who is having a right of economic benefit from the use of the asset? That is number one. Number two, who is having a right to direct the use of the asset? Number one, it talks about benefits, that who is getting the benefit from use of the asset. Economic benefit, I'm talking about economic benefit. Number two, who is directing the use? Who is deciding the use of the asset? Who is deciding the use of the asset? Okay. So in this case, if a lessee is getting a right to have all the economic benefit from the use of the asset, and it is the lessee who is deciding that what should be the use of the asset, in that case, it will be concluded that the right to control the use of the identified asset lies with the lessee, right? If the right to control the use of the identified asset does not lies with the lessee, in that case, it is not a lease contract covered under IND AS 116. In that case, you are not required to capitalize right of use asset, credit lease liability. In that case, you can do a simple accounting, like whatever lease rental you are paying, you can debit your lease rental in the expense and you can credit your bank or cash account, right? And this right should remain throughout the period of use. Okay. If the customer has the right only for a portion of the term, then the contract contains the lease for that limited term only. What is meant by economic benefit? Economic benefit means the benefit by using the asset, by holding the asset, or by subleasing the asset, right? What could be the economic benefits? It could be by primary output, it could be by byproducts, it could be by any other benefits, right? A customer has the right to direct the use of the identified asset if he either has the right to direct how and for what purpose the asset is used, or the relevant decision about how and for what purpose the asset is used are predetermined, and the customer has the right to operate in that manner throughout the period of use, and the supplier does not have any right to change the operating instructions, or has designed the asset in a manner that predetermines how and for what purpose the asset will be used throughout the period of use. The supplier may have protective right, which typically define the scope of the customer's right to use, but does not prevent him from having right to control the use of the asset. Sir, we have not understood anything from this slide. Very good. Friends, now I'll start explaining this slide. Friends, as I told you, the right to control the use will be established by two parts. Number one, who is getting the benefit? Number one, who is deciding the use, right? Who is deciding the use? Right to control the use comes by two parts. Who is getting the benefit from using the asset, and who is deciding the use of the asset, right? So what is meant by right to economic benefit? For example, a lessor has given a flat on a rental basis to the lessee, right? Now the lessee is getting the benefits from using that asset, right? Lessee can live in that particular flat. The lessee can store its belongings in that flat. The lessee can sublease that flat. Okay, so if the lessee wants to sublease, it can sublease also. If the lessee wants to invite its guest, it can invite its guest also. The lessee can whatever the lessee wants to do, it can do in that flat, right? So the lessee can get all the economic benefits from using that flat, not from selling the flat, from using the flat. Number two, I'm talking on right to direct the use of the asset. Number two, who is deciding the use of the asset, whether it is lessor or lessee, right? Deciding, who is deciding the use of the asset? Deciding the use of the asset means how the asset is getting used and for what purpose asset is getting used, right? So if the lessor is deciding how the asset is going to be used and for what purpose asset is going to be used, then the right to control the use lies with the lessor, not the lessee, right? So for making it a lease contract under IND AS 116, the decision about how to use the asset and for what purpose the asset is going to be used, it is with the lessee, not the lessor. That is number one, right? Number two, sir, if the decisions about how to use the asset and for what purpose they use the asset, if it is agreed between the lessor and the lessee and it is written in the contract, for example, lessor is saying that okay, this is a residential property, and this residential property has to be used for the residential purpose only. You cannot carry out any commercial activity, right? Why? Because if you will carry out commercial activity, probably if the inspection will happen, then lessor being an owner, the lessor is responsible for this illegal act, because probably in the residential premises, the house tax, the property tax is paid only on the basis of rental accommodation, right? Second, the electricity meter must be a residential meter, not a commercial meter. So it is not that the lessor is talking about that the lessor is taking a decision that you have to use the asset in this manner. The lessor is exercising the protective rights to protect the asset. The lessor is only saying that in many lease contract you will find that these are the contract clauses where it is written that it is a residential premises and no commercial activity will be carried out, right? So some do's and don'ts are already captured at the time of the contract. That is fair. That is fair. Provided. So the customer has to operate, the right to operate in the agreed manner, but the lessor does not have a further right to alter the operating instructions. For example, the lessor has leased out a machinery to the lessee. The lessor has told that the lessee that even in case of aviation industry, when you lease the aircraft, the lessor gives some condition. What condition? The lessor gives some condition like you will not fly this aircraft for more than 4,000 hours or 5,000 hours in a month. Okay. Why? Because it will impact the asset. It will impact the asset. Number two, after every 1 year, you have to get the inspection done for your airframe. Number three, after every 3 years or after every 4 years, you have to get the major maintenance done for this aircraft, right? So these are the instruction which is signed at the time of lease contract, at the time of entering into the lease contract. After that, the lessor does not have any right to change those operating instructions, right? So even though if it is mutually agreed between the lessor and the lessee, and the lessor is defining the operating instruction, right? It is still considered as the right to control the use lies with the lessee if the lessor does not have a right to change the operating instruction in future. Is that clear? So it means the lessor does not have a right to substantive right to substitute. I mean to say alter the operating instructions. Right? Is that clear? Is that clear, friends? Is that clear, friends? Lessor may have protective right, which typically define the scope of the customer right to use the asset, but does not prevent him from having right to control the use of the asset. For example, the lessor has leased the car in favor of the lessee, and lessor is saying that this is a diesel car and the life of the car is 10 years only. So after completion of 10 years, you cannot take this car on the roads. Why? Because the diesel car will not be allowed to run on the roads after 10 years in Delhi, right? In Delhi NCR. Otherwise, the traffic department will seize the car. Or the lessor is saying that you cannot, because the first service has not yet due, you cannot run this car beyond a speed of 120 km per hour. You cannot run this car beyond a speed of 120 km per hour. Number three, you cannot drive this car while you are drunk, right? You cannot do drink and drive, because it may impact you, it may impact my car as well. Right? Probably I'll not get an insurance. If the car will get damaged, I'll not get an insurance. So these are some protective rights which is exercised by the lessor. And in that case, you cannot say that no, the lessor is directing that how to use the asset. You cannot say that, right? The lessor is giving some protective instructions to protect its own asset, right? So friends, right to control the use of the asset. The right to control the use of the asset will be considered with the lessee if the economic benefit from use of the asset lies with the lessee, and the lessee is deciding that how to use the asset and for what purpose the asset is used. Right? For example, if lessee has got the car on a lease basis, it is not the lessor who will decide. It is only the lessee who will decide whether I have to go from X to Y or X to Z or X to Q. It is lessee who will decide. It is not lessor who will decide. Right? For example, if I need to I need to pick 3 customer, 4 customer, 4 guests, 3 guests, or and at let's say I have to run 200 kilometers a day. So I am deciding how to use that asset. The lessor only have a protective right, right? The lessor will only tell me, see, this car is registered in India only. You cannot take this car to Nepal. You cannot take this car to Sri Lanka, right? But of course, you can take, if it is a private car or it is a commercial car, you can take the car to the other states, provided you have to get the permission done, right? You have to pay the challan or that fees, whatever permit fee is there, you have to pay, and you can take the car outside states, right? So it is the lessee who is deciding how to use that asset. It is not the lessor who is deciding how to use the asset and for what purpose the asset is used. Is that clear, friends? Is that clear or not clear? Clear? So again, let me take back to on the Excel file. The second concept is right to control the use of the asset. Right to control the use of the asset, right? Right to control the use of the asset. What is meant by right to control the use of the asset? Means right to control the use of the asset means the benefits from use of benefits from the use of the asset should lie with the lessee, should lies with the lessee. Second, decision about use the asset means how to use and for what purpose the asset is used. It also lies with the lessee. Then only you can say that this is an lease contract within IND AS 116, and then lease accounting has to happen, right? Have you understood this or you have not understood this, guys? Have you understood this? Yeah. Let me discuss some illustration on this aspect. And as I told you that it should be throughout the period of use. And if the customer has a right only for a portion of the term, then the contract contains lease for that limited period only. Right? We will understood this with the help of this example. ABC Limited enters into a contract with XYZ which grants ABC exclusive right to use a specific grain storage facility over a 5-year period in the month of May and June. During these months, ABC Limited has a right to decide which crops are placed in storage and when to remove them. XYZ Limited provides the loading and unloading services for the warehouse activities. During the other 10 months each year, XYZ Limited has the right to determine how the warehouse will be used. Which party has the right to control the use and use of the identified asset during the period of the use? Friends. So ABC Limited is a lessee, is a customer. XYZ Limited is a supplier, which is a lessor, right? This contract, this warehouse contract, this storage space contract, right, is for a period of 5 years. Out of the 5-year period, the exclusive right that which crops are to be placed in storage, when to remove them, how to use that asset, how to use that space, In every year, only 2 months the right is with the lessee. For other 10 months, the right to take a decision how this space is going to be used, for what purpose the space is going to be used, this right is with the lessor. Now the question is, which party has a right to control the use of the identified asset during the period of use? So in this case, out of the 5 year, right, for 10 months, I mean to say for 2 months every year in the month of May and June, the right to control the use lies with the lessee, which is ABC. For the other 10 months in every year, the right to control the use lies with the lessor. In this case, let's see how this question needs to be answered. In the above case, ABC Limited, which is the customer, which is the lessee, has the right to control the use of the identified asset during the period of use because they have the power to determine how the warehouse will be used during the contractually defined usage periods. The analysis should focus on the rights and economics of the use of the warehouse for the specified usage periods, May and June. During the period of the use, ABC Limited has a right to determine how much of a crop to place in storage and the timing of placing and removing the storage. How and what, for what purpose, this right lies with ABC. These rights are more significant to the economics of the use of the asset than loading and unloading services performed by XYZ Limited during the same period. ABC Limited receives all the economic benefit from use of the asset during those specified time period. Therefore, contract contains a lease for the specified period of term, which is May and June, right? Every month for these 2 months, the right to control the use of the asset lies with the lessee, right? For these 2 months, it is a lease contract from IND AS 116 perspective, where the economic benefit concept is also there. Company MNO enters into a 15-year contract with power company PQR to purchase all of the electricity produced by a new solar farm. Company MNO is a company. They entered into a 15-year contract with a power company PQR. Power company is PQR to purchase all of the electricity produced by a new solar farm. So this PQR is an electricity company. They have a solar farm, right? So this company MNO, whatever this PQR power company, whatever they generate, whatever the electricity they generate, this MNO receives all the electricity. This MNO purchases all the electricity from the power company. Okay. PQR owns the solar farm. PQR has the solar farm, and PQR is receiving the tax credit relating to the construction and ownership of the solar farm. So PQR is the owner. PQR is the manufacturer of electricity. PQR is the owner of the electricity, and PQR is the owner of the solar farm, not electricity. PQR is the owner of this farm, right? And PQR is getting a tax credit relating to the construction of the solar farm and ownership of the solar farm. MNO will receive renewable energy credits that accrue from use of the solar farm. And MNO, who is the customer, MNO will receive the renewable energy credit by the government from use of the solar farm. Since if you will see the substance of this transaction, although this solar farm belongs to PQR, right? PQR. But whatever manufacturing is done in this solar farm, the entire manufacturing, the entire unit is produced, is acquired, is purchased by this MNO. Means who is using the complete output? The complete output is used by MNO. It seems like MNO is using this farm, right? And MNO is using this farm. And who is getting the economic benefit like renewable energy credit from using the solar farm? It is MNO who is getting, right? So who has the substantial benefit from the solar farm? Substantial benefit from use of the solar farm, whether PQR or MNO? Of course, MNO. company MNO has a right to obtain substantially all of the economic benefit from use of the solar farm over the 15-year period, because it obtains the electricity produced by the farm, the entire output. You remember I told the output also, who is getting the output, primary output, supplementary output. If you will see here, you can see the primary output, byproduct, any other benefits, right? We have discussed this. Who is getting the output? The entire output is received by the MNO, primary product. And who is getting the renewable energy credit from the use of the solar farm? Again, MNO. Although PQR received the economic benefit from the solar farm in the form of tax credit, these economic benefit relating to the ownership, not from the use of the asset, from the ownership of the asset. The tax credit do not relate to the use of the solar farm and therefore are not considered in the assessment. So whenever you are assessing right to control the use, you have to consider, you have to assess from the perspective of who is getting the benefits from the use of the asset, who is getting the entire output, primary output, secondary output, byproduct, economic benefit from the use of the asset, right? It is important that who is having the economic benefit from the use of the asset. If it is lessee, then of course it is a lease contract within the purview of IND AS 116. Is that clear, friends? Is that clear or not clear? Is that clear? Friends, there are some examples also. We'll discuss this example in the next class. So today I want to conclude the session now. Please let me know if you have any question, right? I will be happy to answer that, right? Even though if you have any question, we will cover that question in the next class as well. I hope you guys have well understood the concept. You guys have well understood the basics of IND AS 116, why this standard was changed, because initially when we have IND AS, we had IND AS 17, but now we have IND AS 116. So you understood the premise of IND AS 116. You understood that the definition of the lease, where the lessor right to control the use period of time over the lease term, right? You have understood the meaning of identified asset. The asset has to be explicitly or implicitly mentioned in the contract, and the lessor should not have a substantive substitution right. You have understood the meaning of right to control the use of the asset, which is nothing, which is the benefits. Who has the right to control the use of the asset? It depends on two factors: who is having the right to, who is having the economic benefit from the use of the asset, and who is directing, who is deciding, who is taking the decision about use of the asset, how to use and for what purposes it is going to be used, right? Is that clear, friends? So thank you, friends. Thank you so much. And we will discuss lot more concept in the next class, because today's class is more from the perspective of, setting the context, giving you the basics, and defining the lease contract, right? And defining the lease. Thank you so much. Bye bye. Take care.